The basic goal is to move from forced standard deviation down to some form of relative calm. Did Mr. Erdogan succeed in doing that in the speech that we heard moments ago?
Not at all. There's been absolutely no change in his defiant stance. I'm not expecting that. I think at this rate, if we're talking about charts, I think we need to toss the charts out the window and talk about recovery rates. I think that's where we are. I think Mr. Erdogan has crossed the Rubicon, if you will, and it's about whether these Turkish debts are going to see 5 to 10 cents recovery, or 10 euro cents on recovery on the dollar or euro,
right,
or 50 cents. I think that's where we are with this.
John, Ambrose Evans Pritchard last night in the Telegraph with a blistering note. I thought it was a great lesson. He had two of our surveillance guests in it as well, which was nice to see. Here is some of the touches of an essay that I'll put out on Twitter. First of all, they allude to the idea that South Africa, Indonesia, and Colombia, that surprised me, would be next in line. Here's the key sentence. The world has become hypersensitive as it grapples with a debt-to-GDP ratio of 318% of the economy, if you will, some 40 percentage points higher than on the eve of the Lehman crisis of 2009. The Fed is unlikely to come to the rescue this time until there is blood on the floor. John, give us the blood level right now in emerging markets.
Put me on the spot there. I think if you're seeing a very clearly widespread contagion from emerging markets spreading into developed markets more profoundly, that's when you see the Fed response begin to be anticipated. I don't think we're there yet, but of course that happens at some level.
John, let me ask you about the dollar as well. We saw the Bloomberg dollar index hit a 13-month high yesterday. Does this mean it is too soon to be bearish on the dollar?
It is too soon, because this is all part of the whole problem, and Turkey was the weakest link here. You have all these debts denominated in foreign currencies, and it's throughout EM. It's everywhere, and it's, of course, those countries with current account deficits that are first to feel the heat when you start to see credit spreads widen. But as long as we have this problem afoot, this is going to be the case. I think the question looming over everything else here is not so much Turkey, but it's the Chinese currency, and of whether they're going to be able to stick to that policy and keep that floor on the Chinese renminbi around the 690 to 7 level.